How's it going, everybody? Welcome back to the channel. Welcome to the channel. What is up? Thank you for watching. Thanks for tuning in. These are the top 5 stock market myths. Yes. Anyways, well, without further ado, let's just get into them. Let's not talk about it. Let's just do it. So number one in big, beautiful letters is you need lots of money. This one's pretty simple, and this is one that I thoroughly believed when I started investing too. Pretty much, like it says, you need a lot of money. What does that mean? It means that you think you need a ton of money. Like you need tens of thousands of dollars, hundreds of thousands of dollars. And that's just simply not true. Actually, I think you need very little. My first personal investment was in Sony. I bought it for $17.10, and I decided to buy 100 shares, which amounted to $1,710. And that's it. That was my first investment. So under $2,000. Now that is American. I'm Canadian, so it probably was over $2,000, I think. But that's how much it was. So you don't need a ton of money. And technically, I wouldn't even do that again. I think I bought too much of it because I was only planning to buy like 2, maybe 300 shares max. And like that was going to be like my only stock. And yeah, and I was going to ride it for a little bit, see what happened. But I wouldn't do that again. Actually, I would probably only buy like 25 to 50 shares at a time. I would have to see how much. I like to do the SIP strategy, the small initial position. So definitely don't buy all at once. Break up your buys. So you really don't need a lot of money. Really, a few $100s, even $1,000 could really get you started in the market pretty well. So don't think you need like, many thousands, or like I personally wanted to save up $6,000. I don't know why that was my number, but $6,000 was like, I need at least this much to invest. That's not true. That's not true. And I suffered a little bit because of that. So you really don't need a lot of money. Just start investing when you feel ready and when you want to. And I'm going to make a video, a little series about the steps to start investing. So stay tuned to that little snippet. Anyways, number two is you need to be a pro. That's just simply not true. You do not need any type of qualifications to invest. You do need to definitely do your research and look at stocks, but you don't actually need a degree or be like a professional money manager. Honest to God, I think Wall Street and just like stock market in general, they like to use a lot of like fancy terms and terminology and whatnot just to make you sound or think you're dumb. That's just not true. Like they're just saying like kind of useless words, like simple words in the sense that sure, it's stock market terminology, it's stock market lingo, but Duolingo teaches you a language too. It's not complex. It's not that challenging. I mean, I learned it, so honestly, anyone could kind of learn it. That's how I feel about it. So you definitely don't need to be like a professional. That is for sure. You don't need to be a hedge fund. And truth be told, here's a little secret. They lose money. Yeah, hedge funds actually lose money. They're not always profitable, okay? There's a ton of hedge funds that always go bankrupt or just flat out lose money. There's a ton of them. Even like someone like Warren Buffett. He's not perfect, believe me. They lose money. Everyone loses money, okay? So that's pretty much how it is. It's just the name of the game. Some people make money, some people lose money. But I thoroughly believe that 9 times out of 10, 9 years out of 10, 9 stocks out of 10, you can make money. And I'll take those odds any day. As long as you do your research, I think you can actually turn out to be better than a professional. Because I think there's nothing that qualifies them to be a professional. That's facts. Moving on to number 3. Number 3 is buy during panics, recessions, pandemics, any one of those. Really, any one of those is a great time to buy. In good companies. I can't stress that part enough. Don't be picking just any old company thinking it's going to go up, because that's not true. Actually, you have a better likelihood of losing money on certain stocks. But here's where it gets interesting. So Warren Buffett, the GOAT, he has this quote. It's be fearful when others are greedy. Be greedy when others are fearful. Basically meaning when everyone thinks it's all good and dandy and everything keeps going up and up and up, don't buy. Don't buy. Start selling. And when everything starts going down and everyone's panicking and it's officially the end of the world, you should probably start buying. And truth be told, if it is the end of the world, what good is money? It's useless. Might as well invest it. At least you did something. Can't use it anyways. It's the end of the world. Who accepts money? Who knows? Maybe we'll be accepting like Nuka-Cola bottle caps, you know? It's a Fallout reference for you. But anyways, so basically buy during panics, recessions, pandemics, hint, hint, you know, but definitely only buy good quality companies. Here's an interesting thing. Everyone's probably heard this. It's one of the like number one sayings: buy low, sell high. It's extremely hard to buy low when you bought at the top of a bubble. That would turn into buy high, sell low. You don't want that, all right? This game is about making the least amount of mistakes. The more mistakes you make, well, the more money it costs you, all right? And the name of the game is maintaining and gaining capital. That is the goal, all right? That's it. That's your goal. Just make money, all right? So you need to do that, and you need to do it in the most best, safest way possible. The best, safest way possible is to buy it when it's near its bottom. It's nearly impossible to tell when it is the bottom. It's not like there's a flag going up saying, we hit the bottom, you know, we hit the dirt. That's it. We can't go any lower. That doesn't happen. You know, the bottom is zero. If you bought in the 2008, 2009 global financial crisis, you've probably made a killing. Unless you bought Lehman Brothers, you know, then they went bankrupt. So, yeah, but if you bought something else, if you bought Apple, Microsoft, Google, Amazon, you would have done all right. Netflix, you would have killed it. Domino's Pizza, yeah, you would have made a killing. Chipotle, Tesla, some other companies, sure, there's a ton of them. But yeah, there's definitely some you would have lost money on. So be careful with this one. But really, you got to look at it as a buying opportunity. So buy during panics, recessions, pandemics, any really economic downturn. So you can still buy, but make sure you buy good quality, safe stocks. And that leads me to number 4. The fourth one is blue chips are safe. Well, first off, we probably have to define what a blue chip is. So what is a blue chip? Well, it's pretty much a company you've heard of, a company you don't have to explain, as in Apple, Microsoft, Google, Walmart, Costco. The list goes on and on. Basically, if you've heard of the company and like you mention it to someone and they know exactly what you were talking about, that's probably a blue chip, okay? It's big companies with huge market caps. We're talking 50 billion, 100 billion, hundreds of billion. You know, Disney is a big blue chip one, right? So let's talk about some of these blue chips that are safe. Well, I love Disney, and I'll be honest, I thought it was a hella safe stock until something called the coronavirus came along, and damn, it wasn't too safe anymore, and you know, hit the fan, and things changed, to be honest. Things really changed. So you have to be careful with blue chips. Obviously, that's considered a black swan event, as in nobody saw it coming, nobody expected it, and it's just like a once in like 100-year type thing that just comes along and screws everything up. Yes, it kind of is. But still, you know, it goes to show you that blue chips are not always safe, you know? Like, you can't just pick a company and go, that's it, it's good. It's a good investment because it's Walmart, you know? It's a good investment because it's Disney or it's Costco or something like that. Examples of this: Boeing. Boeing is a huge company. Like at one point, for a long time, the largest, by market cap at least, manufacturing company in the US. Tesla surpassed it. I'll be honest, I didn't think I'd see that day for years. It happened this year. That's crazy. This is a stock that was like in the 400s, went down under 100, like in the 90s. I think he even went down to the 80s at one point. Can you believe that? Damn, that's not too safe. And like there's GE, one of the biggest downfalls, from the 30s to like a $5 stock. That was considered a mega blue chip, you know, like a serious blue chip right there. It's like a company that was worth hundreds of billions of dollars. So blue chips are not always safe, all right? You have to evaluate them on a company-to-company basis. You never really know. Just because you've heard of the company and you're like, well, it's FedEx. Not true. Not true. Even those companies can still go bankrupt. Back in the day, Blockbuster was huge. I remember going there as a kid, and if you're around my age, a little older, a little younger, you probably remember going to Blockbuster too. As a kid, I didn't really have stocks and business on my mind. I did not think Blockbuster was going to go bankrupt. Well, here we are. Good thing I didn't invest when I was like 6, because that would have sucked. Number 5 is you missed your chance. One of the easiest ones and a very important one. You missed your chance. What does this mean? So let me tell you a little something too. One time, I was talking to this guy, and we were talking about investing, and I told him I invest and whatnot. And he said, yeah, I don't invest because, once a company has become public, you've already missed your chance. I looked at him like flabbergasted, and I was kind of like, bro, what are you talking about? He said, when a company IPOs, it's over. Like, they're not really going to go anywhere. And I said, so Coca-Cola in 1919 hasn't gone anywhere? He said, well, that's like once in a lifetime. Like, who knows? Like, Coca-Cola doesn't come out every week. To his point, sure. But Apple IPO'd, Google, Netflix, Domino's. These are companies that weren't crazy. You've heard of them. Uber, a relatively new one, that company's going to be worth a lot of money. We don't even have to go that back. Facebook, not even that long ago. I think it's done pretty well in our lifetime. Like, you missed your chance. You did not miss your chance, all right? I missed the tech bubble or something. Like, I totally missed my opportunity to invest, so I said, I can't invest again. Well, you think back in the day, everyone knew that was going to happen? It's super easy to look back. Like, hindsight 2020. Easy to look back and go, yeah, I should have bought that. I should have done this. I should have done that. But, like, don't live your life like that. Don't live your life like I should have. Live your life like I will. I could, So things like that. Don't be like, I should. So don't say you missed your chance. You didn't miss your chance. Maybe it wasn't your chance. Your chance is coming. So make the next chance your chance. And turn that chance into a golden opportunity. For example, are you born lucky? Sometimes, yes. If you're born in the right country, especially to the right parents, it definitely helps your odds. However, you can train yourself to see opportunities. Once you start looking at stocks, you start to see opportunities versus the next person who doesn't even know what the hell they're looking at. It's like businesses. You start looking at businesses to buy or business to acquire, business to open, you start noticing more things. So when an opportunity inevitably comes your way, you can spot an opportunity, and that is crucial. So you didn't miss your chance. You just weren't looking at the time. Or you were lazy and you didn't care. But the next chance, you might not miss it because now you're looking at it and now you see an opportunity. So now you look back at, say, the pandemic and go, wow, I'm so happy I bought, okay? You don't want to be looking 2, 3, 4, 5, 10 years from now and go, oh my God, I had such a golden opportunity. I could have made so much money. Oh my God, I could have been like, what? No, you don't want to do that. You want to have that money and, preferably don't do that, but you can do that. That's the more important thing. You can do that, all right? So don't miss your opportunity. And you didn't miss your opportunity. You missed one of 1,000 opportunities. So what? Life goes on. Move on to the next opportunity. The next thing is just around the corner. That's what you gotta be doing. You gotta be peeking out your head around that corner and be like, yo, you see that opportunity over there? You see that right there? That's mine. That's what you gotta do. So you do not miss your opportunity. Your opportunity is coming. Just need to have your eyes opened and you'll see the opportunity. All right, so that's pretty much it for top 5 investing myths. I hope this video helped you out. I know definitely I fell victim to a few of these. I was even a little bit like the last one right now. You missed your opportunity. Sure, everyone thinks that. When I bought Apple in 2014, okay, this is pre-stock split, it was $599. After stock split, that equates to around $85-ish dollars. Okay? Do you know when I bought this in 2014, everyone was saying, you missed the boat on Apple, like it's done, it's over, like they've done what they need to do, that's it, they're not going to go any higher. $85. That's today's price. It would be $85. This stock is over $300. You know I bought Microsoft in 2014 at $39? 39 bucks. The stock's like 180 right now. And even back then, I remember looking at articles, people saying like, oh no, it's done. Microsoft's over. Like it's just this old computer company. No one cares. It's all these newer companies coming up. Man, you did not miss the boat. Google was under 600 bucks. Amazon was, so cheap. You can't dwell on things like that. You just gotta move on, move past it. That's it. As long as you're making money, you're making gains, you're winning, all right? You're winning. First world problem, making money. Who would have thought? Anyways, hopefully you enjoyed the video. If you did enjoy the video, always remember to hit that like button. Also, new haircut. I don't know if you like it. It's a quarantine cut. If you're watching this out of quarantine, well, then you know the struggle. If you like it, well, it's my girlfriend's first time, so I think she did okay. I don't know if I'm going to keep this style or go back to the other ones. Kind of channeling my inner Brad Pitt fury. Obviously, he looks a bit better than I do. That's an understatement. But, yeah, if you like my haircut, well, then subscribe. If you don't like my haircut, well, then you should also subscribe, because then maybe it'll be different in another video. Remember to comment down below, turn on that bell notification, all that good stuff. Share this video with your friends, family, loved ones, dog, child, neighbor, social distance, 6 feet away, show them my video. Sure, why not? I'll take it. Anyways, until next time, have an amazing, beautiful, life-changing, one-of-a-kind day, and I'll see you beautiful people next time.